Hey, good morning, guys. It's BA here. It's Monday morning, December 5th, 2016, and this is our weekly update. Let's get right to it. Hey, this week, for the week, we're going to check out the weekly zones from now through Friday. Just a reminder that the Fed interest rate decision is December 14th. That's, what have we got next week, next Wednesday? And then we've got December expiration 2 days after that. December 16th, and just remember, guys, Dec expiration has been historically just one of the most bullish weeks in the stock market. Typically, like we've talked about for years, December is generally a time when volatility contracts and markets nudge higher going into the end of the year. Hence, the Santa Claus rally is what they refer to it as. So. We've had two rough Decembers in the past. Last December was the most volatile December since 1928. One of the most volatile. I think there were two other ones that matched it in just moves. It was just an unbelievable December last year. And then, of course, we had the sell-off as soon as the bell rang into January 1st. Then the December before that, we had another strange occurrence in that we had a few stocks that were moving higher into December, and we had the majority of stocks that were moving lower. So you had to be a really good stock picker. And 2 Decembers ago, we had a lot of credit spreads, debit spreads. So that was not the typical December as well. So. And I think the December before that is when we had just started our class up, and that was a typical December. It was where you just, and I literally had 30-some positions on going into December, where I just threw darts at and just used our normal strategies, bullish strategies going into December. And, all 30 positions expired for a max profit. Not even a sweat. That's what we typically expect for a December move. But we haven't had one in the last 2 years, so at some point in time, those historical stats will return. Anyway, let's get right to our weekly zones. So what we're looking at now is the ES. Guys, that was just an unbelievable move in the overnight session last night. I don't know what happened at 2 o'clock in the morning, but stock markets ripped 20. I think stock market ripped like 22, 24 points in less than 2 hours. Just a huge move. Had a big turnaround in the crude market. Crude market was looking weak all night long, and 2 o'clock bell rang. And there goes crude, another rip higher. So not sure what happened at 2 o'clock in the morning, but it was news related to get the crowd to drive this market up the way it was. So here's where we sit. Here's the weekly levels. We've got 22.67 on the upside, 21.34 on the downside. And guys, again, I'm not going to play this market unless we get some kind of sell-off to the downside. And I don't think it's going to happen right now. It's easy for me to say we get 20 down in the S&Ps, and I'm going to sell that first level right here. But it's not going to happen, guys. We're in that period where, look at this. The market, it took it, 30-some points down. It took it 5 days to get 30-some points down. We recovered over half of that in 2 hours last night. So again, that relationship and that ratio of the stock market being down, the down periods being measured in, we'll call it minutes, and the up periods being measured in weeks. That still exists. It's still there. It's not going away either. This thing is just ridiculously bullish to the upside. So anytime they get a chance to take them down, when it's a concerted effort, trust me, it's just there so they can get better prices because they know this thing's going higher. And I hate the up markets. So, but I got to play it. That's what we have to do. So I'm waiting for the low probability chance of a 20 handle down move off at today's prices to sell that somewhere around the 2160 level. That's what I would be looking at. But there's nothing to do in this market absolutely right now. I could sell the strangle, but I want to conserve capital and play my crude position. 10 days left in that, and that's where That's where the money is. And Crude's still ripping higher right now. It's just unbelievable as we're recording this. Just an unbelievable rip higher. What's the markets doing? Yep, stock markets are ripping up too. So beautiful. All right, ZBs, 30-year Treasury bonds. We got levels at 154.15 and 145.18. So yeah, Treasury bond market still looks dead. No sign of life there whatsoever. Don't know if there's any survivors left in the bond market. Just the regular players right now. All right, crude. We already talked about that. You know, we would expect, I would hope we'd get one day of reprieve in this market. It looked like we were going to get it last night, but no chance of it. So, so anyway, you know, this is a market that's not exhibiting any two-sided action right now. I mean, we've gone 20% or more in not even four trading sessions, 3 trading sessions in the overnight last night. So another just rip your face off rally to the upside, straight up, no move down. And this has just been one of the hardest periods to trade in the crude market that I've seen. So you know, it's just been characterized by these 15% moves in one direction, and now we're flirting with the 20%. And it's one thing when we go 20%, you know, in 2 weeks. That's bad enough. But when we do it in 3 trading days, 3.5 trading days, I mean, yeah, it's something else. So I'm not sure where crude's going to stop. I can tell you where our levels are. I can tell you what our probabilities are of getting to the next level. And that's where the stats lie. I have no opinion about the crude market. I have no idea what it's going to do. So, but I do know the levels. And these first levels right here, you know, there's roughly 35% chance that it's going to get to one of these levels. The way it's moving, 35% chance really turns out to a 70% chance of this thing touching this first level right here. I think that's the move this week is touch. So I have to watch that. I have my break-evens for my current position highlighted in green here. So, and I've got to tell you guys, looking at the weekly zones, last week's low was in the high 30s. This week's low is 47 in the low zone. I haven't had a larger move in the extremes from low to low from 1 week to the next since I've been doing this. I mean, that was just a huge move last week, and for it to move these levels the way it has, just phenomenal. So so anyway, I'm using my levels to make adjustments in my current crude position, which has 10 days left. And we see here upper level 57.22, lower level 47.37. I would love to see this thing get back, you know, make a run back to this first level right here, but I don't know, who knows. I'm selling the 49s and 48s. Sold some 49s this morning, about a half a dozen 49 puts this morning, just to get the current picture that I have right now. So, and you know, the way it's moving right now, yeah, we're still up, still climbing. I'm going to end up probably going in there and selling a half a dozen more puts at the 49 level. So yeah, we're to the point now where I'm just selling sixes, selling the 49s or whatever put strike it is in the half a dozen lot size, just to make a strategy adjustments. So, but that's where we are in this position. 10 more days, hoping for a little two-sided action here. That would be nice. All right, the dollar. We got upper level 105.69, lower level 96.20, 96.29. So dollar hasn't, I think it's only hit that lower level once since we've been monitoring it. So dollar's pretty stable around these levels. We just can't really do anything with the dollar because there's no options to play. Okay, here's gold. We've got gold, the levels 112.10 for the upside and 11.22 on the downside. So that's it. Not really much commentary on gold. It's maintaining a kind of a orderly down move. You know, we had one big blip to the downside, which happened back up in here that one big blip which kind of set the stage, and it's just been trickling down every so often. So it's looking a lot like that dollar down move. Excuse me, guys. Holy crikeys, man! What just happened in the? Yeah, we just lost. Let me pull up another chart here. Give me just a second. Man, something just happened in the crude market. We just lost 40 cents in about 30 seconds. That was a huge move. I don't know if they're trying to shake guys out on the downside to run this thing up higher, or whether any news came out. I don't know. A lot of times a ploy like that is to what the traders will do is they'll drive this thing down because it's had such a positive drift to the upside. They'll drive this thing down, shake everybody out, and then just rip it right back up higher. That's just one of the oldest ploys in the book. They've been using it for hundreds of years, so it never changes because mankind doesn't change. Our tactics don't change. It's just the technology we use to get there. So, so we'll take a look. I like it though. We went from 52.42 down to 52.09. Like I said, guys, in a blip, and yeah, it looks like they're trying to run them back up right now. So they may have shaken out the weak hands. I hope not, but yeah, it's interesting to watch though. All right, guys, I'll tell you what. That's it for the weekly update. I'll try to get back on track with updating you on my positions tonight. We're making a lot of progress in some of the new things I'm trying to roll out, so I'm going to continue working on that and gradually get back into the updates. So anyway, you guys have a nice trading week. I'll update you on where we're having our class tomorrow night. I think the library is still closed, so I'll put out some info there. If anybody has any recommendations on where you might want to meet, just send me an email and we'll entertain it. Last week was really good at the Scrub Oaks restaurant. I enjoyed that. And so anyway, you guys have a nice one. It's BA signing out.